Welcome back to the Crypto Picture channel, where I help you see crypto through a clear lens. Today, we're going to be discussing the Bitcoin chart, as it is the most important chart. And I've gone over multiple times the fact that, unfortunately everything is tied to Bitcoin in this market. But with all that being said, let's jump straight into the content. So looking at the Bitcoin weekly chart, we have seen a break of one low right here. As I did mention with the break, I did think that this was most likely to break. So I actually closed my trades out somewhere up here. This isn't enough to, have me selling long-term positions. But in my opinion, having a trade open at the moment is just bad risk management. At this point, you want to hold your long-term holds, depending on your risk tolerance. But for me, again, I got into most of my positions down and around these levels back in, August of last year. Some of them even in 2018, later end of 2018 for my Bitcoin and Ethereum. So for me, there's nothing here that's critical at the moment. This is really going to be our next huge test here. I do like it. There's some confluence here when taking a look at this chart. We have the 21-week moving average, as well as the previous low coming in around the same levels here. Now, that doesn't mean that we can't see a huge wick down. We've seen it in the past, and I'll go over what we have seen in the past with you guys here on this video. But for me personally, I do see this as a opportunity until proven otherwise. I would also need to see a weekly candle close below this level in order for me to even remotely get bearish. Again, we can have wicks to the downside, and that's fine. So looking at this, and I'm just going to make it full screen here, the last time we were at the 21-week moving average was roughly around the $10,000, give or take a few $100. This is the last time we revisited the 21-week moving average in this entire bull market. Now, if we look at Bitcoin's previous history, what do we see? We see multiple tests of this level, and we haven't really been seeing that. This one was probably the last one, and then we went parabolic. So we haven't really seen that in this current bull market. Now, you can get massive wicks. Like if we take a measured move of this wick here, we got a massive 21% wick. And if you close without the weekly candle completing, you instantly lost, 20% of your Bitcoin position. So if you had one Bitcoin and you sold the wick down here and didn't wait for a weekly candle close, you literally just lost 0.2 of a Bitcoin. That's insane, right? So these wicks will bully you out of your positions. That's why I always go over the importance of weekly candle closes. A structure is not officially broken until there's a close below a level, a weekly candle close. Does sometimes, this wick indicates strength to me because it got bought back up quite quickly. They can tell you a story as well, right? But what we would want to look for is sell pressure to the upside, right? So wicks on the upside, that meaning a lot of sell pressures coming in here, a lot of sell pressures coming in here, a lot of sell pressure. So that drives price down because there's more sellers than buyers. Now, since we started this bull market, what do we see? Yeah, we see a little bit of wicks at the top, but if you compare it, relatively speaking, most of our wicks are large wicks on the downside. Large wicks 50-50 here, large wick to the downside, still a larger wick to the downside here. This was a doji candle indecision after a downtrend, showing that it may reverse. But even here, we are still seeing more buyers, 50-50 split here. So we'll have to see. But this really is the main area. Now, going back to the previous bull market, we didn't see any candles really close below here, right? We saw no candles closing below the 21-week moving average. We didn't see it here. We didn't see it here. There was no candles closing below. We need to really take into consideration that this is a normal type of behavior for Bitcoin. And you need to psychologically prepare yourself for scenarios like this. Now, there is one point of interest that I wanted to bring up here. If we are in a bull market more similar to the 2013 bull market, of course, we're not going to be as volatile, right? Because back here, Bitcoin was, 100x smaller, right? Which means that it's easier to move the price of Bitcoin when it has a small market cap like this. So we did see a weekly candle close below, but then we were fighting to get back above this level. Now, in a scenario like this, you would want to wait for a confirmation. And look, you had time, guys. You had 1, 2, 3, 4 weeks to get back in. Yes, would you have lost a little bit of your position if, let's say, you got out on the weekly close? Yes. But at the same time, for the most part, we usually get a retest when this level is broken. Like even here, right? We broke down weekly close, but eventually after 3 candles, we got a retest of the 21-week moving average. We even got above it briefly over here before the bear market started. But again, it was a lot more volatile here. So if we go and look at these areas, we broke below the 21-week moving average. And then within 2 weeks, we were already trading above it, or 4 weeks later, we were way above it. But we created a local high here and it was a lower high. You would not want to consider this as a continuation or get bullish here, because after this candle closed, we got back above below the 21-week moving average, and this was confirmed as a local high. And the high was lower than the previous high. And if you look at the structure of Bitcoin, higher high, higher high, higher high, higher high, keeps going, right? Every time we saw a higher high, this was the first lower high that you saw in the entire bull market. So let's say you're even a conservative macro investor, this would have been your signal to be like, okay, I'm out of all my positions at this point. But saying that, I mean, you should still be systematically taking profits as well. Like, I know this is kind of the part of the greed psychology that, like, you want to hold every last bit of it until, like, you make your whatever desired amount of money that you want to make. But you should really try to lose that figure or that number that's in your head. It's always good to have a target in mind and visualize, a goal for yourself on a monetary or financial perspective, but don't get fixed to that goal, because you will end up losing more money. You need to be realistic, and also you need to learn to chart. You need to use TA. It gives you a perceived edge, so you need to use it. It's simply put, guys, like, it is what it is. Like here, you got to retest. If you were one of the panic sellers here and Bitcoin just took off on you, you're always decreasing your Bitcoin position every time you panic sell, and then it moves higher than what you purchased it at, right? So that's what I'm saying. A weekly close below would signify some weakness. So I'm okay to de-risk there, even though, let's say we start going higher afterwards, I'm still okay with this. And another reason that I really don't think we're at a macro top, because we don't have much space right now between the 21-week moving average and where price topped out at. Like if we look here, there was a huge gap between the 21-week moving average and Bitcoin's all-time high. It was about 55% away. So over here, if we look, we're only about 32% away from here. So I still don't think we got the parabolic blow off top. Are we going to get it because so many people are expecting it? That's yet to be seen. But what I would say is, if you have not taken profits up here, you have not sold the panic or the sell pressure, I mean, you're selling so close to a big support bounce area that it would just make no sense here. And again, this isn't financial advice. You do whatever you need to do. But if you didn't sell anything yet, like, you're almost going to be like selling at one of the largest support levels or the most significant support levels of this entire trend, a 21-week moving average plus the weekly market structure low, which is coming in right here at 43,000. And really from where we are right now, like 10%. So yeah, do you want to take the chance to buy 10% lower? go ahead, right? And the chances are we're probably very likely to come down to this level, if not maybe even get a wick all the way down here and really scare some people. But we'll have to see what happens. I'm taking it one day at a time. And you guys know I've been going over preserving my capital. So I've shared everything with you guys. I've been a pretty open book. And that is what I'm going to do. And just to be fully transparent, I even shared this with my Patreons. The link is down below if you're interested. I really showed them that these two levels are the most critical and the most support that we are going to see this entire bull market. If they're broken on a weekly close, it's probably not great, in all honesty. It's probably not great. But we'll have to take it a day at a time. We'll have to continue to monitor. We'll have to see what happens. But with that being said, guys, please like and subscribe. And until next time, we'll see you on the next video. Cheers.